All right. Well, good afternoon, everybody. It is 2 o'clock Mountain Time, 4 p.m. Eastern. The market just closed, and we're here for another Stock Investing for Beginners webcast. Want to give a shout out to Will and Rojo and Sharon and Scott and Wacky and everybody else that's here today. Simone, appreciate you taking some time out of your Wednesday afternoon to be here with me. Barb's in the chat. If you have any questions, please feel free to chat those in. You can follow me on x.com at Scott Thompson CS or at Barb Armstrong CS. If you want to follow Barb, great place to stay in touch with all of us. Thanks again for being here. Today we're going to go over the open positions that we have, talk about the AI stocks that we purchased in our paper money last week and just see kind of what happened with those, talk about that concept. Then we'll look for some new opportunities in the S&P 100 for today's webcast. So before we get started, let me remind everybody that today's presentation is for educational purposes only, not a recommendation of any particular stock or investment strategy that we're using. We are using paper money, and there are some significant differences with paper money compared to the real money trading. We do talk about stop losses in every webcast, and there's no guarantee that an execution of a stop order will be at or near the stop price. Be aware that all investing involves risk, including the loss of principal, and past performance is no guarantee of future success. If you're brand new to our webcast, let me point you to our lesson series. We have an 8-lesson series that we kicked off several months ago now, and the webcasts that we do now are follow-ups to the components of our lesson series. But if you go to our homepage on YouTube, our Trader Talks channel, which I'll just chat in this link here for everybody. Scroll down a little bit, you'll see Stock Investing Basics, and we have just our 8 lessons here. If you want to go catch all of our webcasts, if you click on this playlist link right here, and then scroll down a couple lines, it's just right here. You can view the full playlist, and this is where we have all of the episodes that we've done since June of 2025 when we started this Stock Investing for Beginners webcast. So check those out when you get an opportunity. Let's go ahead and jump into our Thinkorswim platform and take a look. We have a really volatile week this last week or so. The market fell pretty hard on Monday, and we actually got stopped out of a few stocks. So we'll take a look at those. But first, I want to take a look just at our open positions. If you go to the description of this webcast, you'll see the scripts for these 2 column headers that we have that just make it really convenient and really fast to look at our open positions. If we have a red box on this column that says above the 50-period moving average, is what this says, above 50 SMA. So if the stock has a red box there, we know the stock's actually below the 50-period moving average, and we may need to adjust a stop. So I wanted to look at those first, and then take a look at a couple that got stopped out on Monday and Friday last week as the market dropped pretty hard. So let's go over here to the charts. DD had a red arrow. It actually got the red arrow several days ago, back on the 6th. So we adjusted the stop there. Again, the rule of thumb that we like to use is when we're doing a stop, we have a rule set that we follow. The rule is to put the stop 3% below the low price on the day that it closes below that 50-period moving average. But when you get that stop number, most traders, most investors will ask themselves if that stop makes sense, meaning, is it right on top of or near a support level? And if it is, then they'll usually maybe go 3%, 2% below that near support level. And that's what we did here on DD. It came really close to getting stopped out a few days ago. We're kind of back flirting with the 50-period moving average, but there's really nothing to do here. It's still a red arrow on the MACD, or sorry, on the moving average. The MACD actually turned green, but it didn't go back above that moving average. So there's no new buy signal here. For those of you that like price patterns, this is actually forming up a little bit of an inverted head and shoulders. Do you guys see that? If I zoom in a little closer, little shoulder over here on the left side, down here the head, and then on the right side, we're forming up a shoulder with a neckline right there, maybe about 46.30 or so, 46.40. But that's a bullish reversal price pattern. Now, they don't always work out that way, but that's what that looks like it's forming up there. Cisco was the other one that has the two red arrows, had a red arrow on the MACD and it's a below the moving average. And this one's been really choppy. You can see the stock's been going up and down, lots of red and green arrows. When it closes above the moving average, that's what generates a green arrow. If the price closes below the moving average, that'll generate a red arrow. And some of you may have seen, during the day, like you can see today's high was about $79.12, and the moving average is at 79.12. So if it pokes above that during the day, you'll actually get a green arrow during the day. And then if it goes back down below the moving average, the green arrow would disappear. So if you watch your stocks during the day, you might see that happen. But here's one again where the support level feels like it's about that 75.30 level. We haven't really adjusted the stop through all this chop and slop over here with the stock moving up and down. It's just, most investors, most traders are not going to be bothering changing their stop. If this 75 level of support gets broken, it'll basically come down and hit the stop and we'll get stopped out. All right. So again, welcome to those of you that are just joining us. We're going over some open positions on our monitor tab. We're using what we call a 2 green arrow investing plan. You can go back, there's several episodes where we've kind of gone over these rules and I mentioned what they are, but basically if it goes above the green moving average, which is the 50-period moving average, and the MACD turns green, we consider that a buy signal. If it closes below the moving average and that gives a red arrow and then the MACD is red, we consider that a stop adjustment signal. This plan is meant to be a longer term, intermediate to longer term type of investing plan. And it's kind of interesting. If you look here at Cisco, you can see we have a decent little profit on Cisco. If I click on that P&L open, we actually bought this in June of last year. So these rules that we've been trading have allowed us to stay in this trade for about 10 months at this point. Now that doesn't always happen. DD we just bought, we're actually losing money on this one, and we got into this in February, just last month or two. So those are the ones that are currently open, but I wanted to go over 3 other stocks that we got stopped out of on this really choppiness. Now MU, all of these, we've traded in and out of these over the last 10 months or so. The last entry that we had on MU, I got some data just written here. We got in on a green arrow buy signal right there. One of the things I want to point out that is really challenging for new investors, when I first started investing, I would see that buy signal. And if I zoom backwards on that day, I mean, wasn't that a horrible day to get in? I mean, at the very top, right? I mean, it's basically made a brand new high and you just feel like, oh man, that's so expensive, right? And so what I used to do when I first started investing is I would kind of just think to myself, well, I'll buy it when it pulls back, or I'll buy it on the next opportunity. And what would happen inevitably is there would never be a pullback, or there wouldn't be a pullback sufficient to feel really good about buying it. So I just missed buy signals. And so, I've come to accept that, number one, there's no perfect buy signal. So whether you're doing 2 green arrows like we have here, a bounce off support, or a break of resistance, guess what? All of those entry signals could lead to a loss. And it took me about 2 years to really accept that. And so I thought to myself, after I accepted that, well, I'll just go in with a valid entry signal, whatever that is, and there's lots of good ones, and I'll position size my trade around an acceptable loss. That way, if it does go against me right away, I get stopped out, I lose some money, but I'm still capable of taking that next trade. So let me zoom back out here on Micron. So Micron, the last time we traded this, we got 2 green arrows. We got in at about 238. You can see the stock actually never closed below the moving average until right there. This is back on the 6th of March, and so that would have been a stop adjustment signal, not a sell signal, but we would have moved our initial stop up there, and then the next day it went down a little bit, closed back above the moving average, made a brand new all-time, 6-month high at 471. And sure, at this point we wish we would have sold it there, but that wasn't in the rules. We got 2 red arrows over here. This day the MACD and the stock actually gave red arrows. We could move our stop up again, and I don't remember where our stop was exactly, but we got stopped out here on the 26th as the stock market pulled back, dragged MU down with it, and we got stopped out at 352.91 with actually a nice little gain. So we were in that trade, well, what was that, about 4 months? So intermediate type of time frame. Would have liked to have stayed in more. Now, here's an important part. If you don't get anything else out of our lesson today, this is an important takeaway. Just because we've been stopped out, if this MU stock still meets our criteria, and our criteria is pretty broad, if it's on the S&P 100, we're willing to trade it. That's our criteria. But now we need to watch for new buy signals. So I don't want to hear anybody coming back, 3 months, 6 months, a year later saying, well, we used to own Micron down at 238. I got stopped out of it. Now it's at $1,000. When, so all those stop orders are stupid. Stop orders do what they do, right? If the trend changes, it's going to knock us out. We got a lower low. We may end up with a lower high, and this may trend down for months. We don't know. But if it does go back up and gets a 2 green arrow signal, if it still meets your rules, that's a new entry point. And sure, it might be higher than 352 where we just sold it, but that's kind of how investing works sometimes. All right, so let's take a look at MU. Another one that we got knocked out of was RTX. RTX, we bought, this one looked a little weird. I looked at this one myself and I was like, why did we buy on that day? But what happened is if you go backwards, during the day, this day, or whenever we looked at this probably had a green arrow on it, and then it sold off dramatically. And so sometimes when you go back and evaluate your entry signals, you'll think, well, why did we get in there? And it's possible that there may have been 2 green arrows during the day, but then it changed as the market fell off that day. So just be aware of that. It looks like maybe we were a little bit late here. But we did end up getting in this on that day, the 10th of October last year at 160. We actually did a short-term trade in one of our classes in December where we did a little bounce off support on a bull flag, and then it hit our target a couple days later. But this longer-term 2 green arrow position, we just got stopped out of a couple days ago. Again, 2 red arrows over here. We move our stop up. Stock continued to fall down, made that short-term lower low and a lower high actually over here. And we got knocked out at 190. So again, nice little gain on this one. The trade lasted about 5 months. So again, intermediate type of time frame. And then the last one I wanted to look at was GILD. GILD we bought over here on the 13th of November for about 125. It chopped around there for a little while. Looked like the trend may just go sideways forever. Then it finally broke out again, made a brand new high, pulled back hard this last, month and a half or two. And so we got stopped out of this one on the 27th at 135, again, for a nice little profit. So, as this type of intermediate trading system develops, yeah, we hope we be in these things for 10 months, 12 months, 18 months, 3 years, 5 years. But a lot of times with a 50-period moving average, the stock will go down and we'll see some of this choppiness and knock us out of the trade. And so, some of them will be winners, some of them will be losers. And then, our job is, if it still meets our criteria, we keep an eye on it and we act on the next buy signal. Okay, so let me know if you have some questions on this one here. Speak Truth says accepting a loss is one of the most difficult parts of trading. Absolutely. And there's an easy solution for this. So I'm glad you brought this up, Speak Truth. The solution is this. Okay, it's 8 letters: risk less. And that may sound like an easy concept, but it's not. But just think to yourself, if you just bought 1 share of something and you had a $10 away stop and it hits your stop, you'd lose $10. How many of you would really love that your next loss is only $10, right? But if you're struggling with that idea of having a loss, the solution, at least in my opinion, is to risk less. And then as you start to develop some rules that you can follow, an entry signal or a strategy that you feel comfortable with. And this 2 green arrow strategy is just a sample strategy. Usually some people need a place to start, and then they're going to modify their rules to suit their needs, as time goes on, as they practice. And, I always tell people to practice in paper money, 10, 20, 30 trades using a specific rule set. Then go back and analyze those trades that you've done and ask yourself, am I able to see the buy signal? Am I able to act on that buy signal effectively? can I position size correctly? Am I okay if I get a loss right after buying, the next day, next 2 days? Those types of questions. And then you start dialing into a concept or a set of rules that you can actually trade very effectively. And so hopefully that's helpful for you. All right. Let's see. Jamaica says, where can we find out more about this trading system? Is there playlist in this class? On that Trader Talks page that I showed you, plan or lesson number 4. Okay, not episode 4, because we've done a lot of episodes, but lesson number 4 on that home page of our Trader Talks. So if you go to Trader Talks, just the home page and scroll down, but right here, this lesson number 4. So lesson number 4, the 6 key components of a trading plan. This is where I cover the rules for this 2 green arrow plan that we're using. Okay, so go there. Maybe Barb can put that link for that particular webcast in for you. All right, now let's go back over here to Thinkorswim. Now, last week we saw some interesting things. We had some AI stocks, if you remember. Let's take a look at ARM first, and I'm going to go back a day. Okay, so this is the day that we ran our webcast last week, and I introduced a concept. Now, this is another concept I wish I knew earlier on, because it would have made my trading life a lot easier. But what we did, and the concept is this, is that when you see a buy signal, like in this case, it was a big volume breakout above resistance. I mean, it just feels like this is so expensive, right? You just think, man, that's just way up there. I don't really want to spend that much money. The moving average is way down here. I got to risk like $30 a share based on my rules. I really don't want to do that. And so last week I introduced a concept that's called scaling in. And what that is like you determine how much of a position you're willing to take. And for these AI stocks, we were willing to invest $1,000 per trade. But what we did was we said, well, I don't know if this is going to break out and just run up. But if it does run up, I want to have some position there. But how often? I gave you a percentage last week. I talked to you about a percentage of how often when a stock breaks out like this and makes these new highs, it comes back and tests the old support resistance areas as new support. How often does that happen? Do you guys remember? Okay, well, chat that in if you do, and I'll tell you right now. So 70% or so of the time. Now, there's no guarantee that that's the exact number, but that's just my observation. About 7 times out of 10, the stock will go up, maybe go up another day or two, and then it comes back and tries to find a new higher low. It tries to establish that new higher low. So what we did is we decided we're going to go in with half a position there at our entry signal day, there at the close. And we put limit orders in for the next day at the closing price, because the market was closed when we meet for our webcast. And then we tried to identify an area of support where we could add to our position. And so we did a couple things. We looked at the bottom of today's gap up. So we looked at that. That's normally a potential support level. We had some old resistance about 143, so we could put an order there. I think we put an order in there about 148 to go in there with our rest of the position. And on ARM, this is what happened. So the next day, the stock opened up a little bit higher, pulled back during the day. And so that limit order that we placed there on the 25th, when we met last, filled on the 26th. And then we got, that's called a shooting star candle pattern. If you haven't been to Barb's mini sessions on candles, she has like 13 really short, really good videos on candle patterns, but that candle pattern is called a shooting star, and it often indicates that the bulls have run out of steam and we're going to see the stock pull back a little bit. Okay, next day we gap down, and during the day that stock went down to our limit order, and again I think it was about 148, and we got filled on that second half, or scaled into that position. And then our hope, of course, is that this somewhere in here we find some support. The next day I think we went a little bit lower, and then yesterday we got a really nice bounce off support, and we're actually still down a little bit on this position, I think. Let me go take a look here on ARM, our net cost, and if you click on P&L open, you can kind of see your entries here. We got in at 159.76 and 148.13 on that pullback. So our average price is 153.94. And so we're net up a little bit on this position here, but now we have a full position where we've invested about $1,000 in here. And the concept that worked exactly what we wanted it to do. It pulled back, bounced, and now we're off to the races again, hopefully. The moving average is rising, and at this point, we'll just continue to trade our 2 green arrow rules. All right. We did the same thing on Marvell, MRVL. Okay, let's just go backwards again. Let's kind of talk through this. So again, we had a huge volume breakout. Breakout just means that we closed above resistance. Generally, people like to see that close by some percentage, 1, 2, 3%. And then we said, oh, okay, there's a valid breakout buy signal. We had 2 green arrows. We had volume behind this, and we put an order in to buy at 98.45, I believe was our limit order. That was the closing price. And we put a limit price to buy some if it pulled back. We would expect 93 to maybe act as support. We did talk about the halfway point through a big green candle like this, maybe be a support level as well. And so, the next day our order filled. Guess what? Shooting star candle. This one actually they might even call like a dragonfly doji. Is that the right term, Barb? Getting my where the open and close are very same. They call it a doji, but I think it's more of a tombstone doji, isn't it? They call it a tombstone or a gravestone doji, meaning it's killing the rally. They kind of get creative with their names. Dragonfly doji is that candle just upside down at a support level. All right. So anyway, get this candle. The expectation now doesn't happen 100% of the time for sure, but the expectation was the stock would come back down and find some new support. Well, next day, the stock gapped up a little bit, sold off. We have a 3 candle pattern called an evening star. That's a bearish candle pattern. We got filled there as it went down to our limit order. And then yesterday or the day before, it really tanked and went down. Luckily, our stop was below the moving average. And so we didn't get knocked out here on the 30th. And then yesterday we got a nice bounce. And then today we even got some good follow through. So this one's actually making some nice money for us already. And this one here on the monitor tab, if we click on this P&L open, we can see our entries. We got in there at 98.98 on the first half, 94.98 on the second half. We have an average price of about $97. And so we have a nice little profit on that. Now, the third one didn't work. I mean, the concept worked perfectly, okay? The concept worked perfectly on the last one. KSCP is the one we did. This stock had been downtrending. It had some horrible news back in 2023. I mentioned when we traded this one, it was pure speculation. And so, we kind of did the same thing on this. Let me zoom backwards. Huge volume breakout here. They had just gotten an okay essentially to get government contracts again. And so this thing just took off like a rocket that day, closed at 520, and that's where we put our limit order in. And we were hoping that this 441 would have acted as a support level. We had our stop down below 369. Now, I want to ask you a question. And for those of you that were here last week, how many of you saw this level and thought, well, this is such an inexpensive stock, kind of volatile. I might even want to put my stop down below the ultimate low down here. Did anybody think about that? Okay, it crossed my mind just because I've been doing this a long time. And so, in this case here, the question would have been, are we willing to risk another 70 cents on this position in order to maybe stay with the trade through the choppiness? And, of course, in class, we chose to put our stop 3% below 369, which I think was like 357 or something like that was our stop order. But I hate getting stopped out. So, for me personally, when I look at things like this, I tend to like to buy fewer shares because I'm risking a little bit more per share, especially on these kind of trend change signals where the trend was obviously down, consolidated, and ran up here. But I didn't do that for our class. We just set our stop 3% below 369. The next day, stock gapped or actually gapped down a little bit on the open. We actually got filled at like $5.08, and then it rallied all the way up to $6, closed at about 5.50 on the day we got in. And then we had an order to buy more at like, I think 480 or 470, somewhere down there. And so the next day it pulled back pretty hard. And then we just got, the same day that we added to our position here, as it came down near that old resistance support area, it just kept going. And ultimately went down to 325, and our stop was there at like 357. I have it written down here. You can see it. And so, the concept still worked. I think this was a very good trade. It just lost money. And so, we got in, it did exactly what we wanted it and expected it to do. It just went down farther. If we had left our stop a little bit lower, we'd still be losing money on the trade, but it would not be stopped out and it wouldn't be a realized loss yet. But anyway, those are the trades I wanted to go over today as we discuss this entry signal and these exit signals, the 2 green arrow, 50 period moving average, simple stock investing plan. It's just an example plan that hopefully will give you a foundation to where you can start having something to practice with in paper money. All right. Now, many times people ask me, well, what watch list are you using, or how do you find these stocks? All of these stocks that you've purchased here in the paper money account, how are you finding these stocks? And we've gone over a lot of different methods. Today, for our class today, all I did is I actually looked at the whole list, all 100 stocks, or 97, or how many ever on the S&P 100 list. I looked at every single stock and I looked for our buy signal. So what I want to do is I want to go back here to the chart, and I'm just going to type in something that I hope doesn't have a buy signal. Now, Wells Fargo, and this is the process I go through. Okay, I'm going to move this up a little bit here and then open up this watch list. This is the S&P 100 watch list. It's a public watch list. It's available to everybody. So if you open up a watch list gadget, click on the name. Now, if this is the first time you've done that, it'll probably say default, but just go to, click that name, go to public, then come down here to R through W, and you'll see S&P 100. Okay, so that's the one list that I've looked through, and I looked through every single one of these. And when I'm doing this, all I'm looking for basically is the stock above the green line. If it's not, I know it's not a buy signal based on our rules. Now, Hugh Foster is asking a great question here. It says, should long-term investors use sell stops? Well, it depends. I didn't mention this earlier, but I'll go ahead and mention it since you asked the question. We have 2 other plans that we're trading where we don't use a stop order, Hugh. One of them is just a very simple method of investing money every single day in the market. We invest in an ETF that tracks the S&P 500 and the NASDAQ 100. And so, this is just a method of, whether you're doing that daily or weekly, that method where we're just investing in the market every single day, every single week, every single month, whatever your cadence works best for you, we don't have a stop. We're employing what's called dollar cost averaging, and that might be up or down. For the first 4 to 6 months we were doing this, the market was going up every single week. And so, every time I bought some additional shares or fractions of a share is what it ended up being, then, my dollar cost averaging was actually going up. And so, but this type of plan where you're just investing regularly every month, every quarter, every day, every week, however you set that up, it doesn't have a stop order. The second plan here is where we're using some of the top 10 holdings of those S&P 500 and NASDAQ 100 is we're buying about $5 each of these stocks, $50 a week, because there's 10 of them. And we just buy a fractional share, and we're simulating what's called Schwab stock slices. And that's not a recommendation, and you can find out more about that in some of our other lessons as well. But this one doesn't have a stop order either. Again, our objective there is just to invest money regularly in the market, and whatever the market's doing, up, down, sideways, we're going to follow our plan, and there's no stop order. So your question then is, should a longer term investor use a stop? Well, it depends. If they're using a plan like a 2 green arrow plan that has a stop order in it, then in my opinion, yeah, they should use a stop order. If they're doing something where they're investing regularly in an index or something like that, then maybe on a plan like that, they wouldn't have a stop order. I think another question to follow up that, Hugh, would be, if you aren't going to use a stop order, how, if any, method are you going to use to monitor your trade and decide when to get out? One of the things that I have seen, unfortunately, many, many, many times with new investors, particularly, is they'll have a mental plan. Oh, if it gets down below this, I will sell it. And Wells Fargo is a pretty good example here, probably. We bought this over here on the 16th. At the time, it looks like it had a low there around 75. It chopped around, broke out, and made a new high here on the 3rd. And I think at that point, people would say, well, if it went down below 82 at that point, I'm going to get out. Ran way up here to 97. And so they start thinking, well, if it goes down below 93, I'll get out. If it goes down. And what happens is it starts to fall. And in this case, it went down below 87. It's like, oh, I should probably get out of there. But then they think, well, there's another support level here at 82. And so they'll hold through that. Oh, see, great. I'm glad I held through it. Oh, wait, I'm not so glad anymore. And then it breaks 82. And then they think, well, I probably should get out here. But then they think, well, there's that support level back here at $80. I'll just wait to break that. Well, then it breaks down below that. And what happens is now they're not investors anymore. They just hope that the trend reverses. And I've seen some horrible, huge losses take place because they didn't have an exit plan. So whether that exit plan is a stop order, which is just a lot easier to execute than a mental stop, I don't think it matters a whole lot unless you cannot or physically can't do a mental stop. Then I think having that stop order is more helpful. So hopefully that helps answer your question. I know that was maybe a little deeper dive than you wanted to go there. But anyway, going back on the S&P 100, when I just literally looked at each one of these stocks, if you click on that and it's linked up here, if I have a 3, so we'll see Apple, I can click on ABBV and see it just scrolls through here, right? I can arrow up or down on my chart and it just scrolls through. So once you know what you're looking for, it's very fast. I can go through these 100 stocks in probably about 5 minutes because all I'm really looking for is are we above the moving average and is the MACD green? All right. So, and I did that and I found Pfizer, FE. I want to make sure we place this new trade and then maybe we'll take a look at the market and see some other thoughts here. So Pfizer, now the question is this a valid buy signal? So let's go back a few days when it wasn't a valid buy signal. Okay, I have to go back over here. Okay, so let me hide my. I don't want to do that. Well, look at the candles, not the lines. Okay, so the question would be is on the far right side of our chart here with Pfizer, and this is back on the 16th of March, is that a valid buy signal based on our rules? And we can see the stocks above the rising moving average. That is one of our rules. So that's a green arrow. The green arrows are green until they turn red. But the MACD turned red back here on the 19th of February and tried to go green, but still red. So this is not a valid buy signal right here. Now, another question that comes up is what would you say the trend is? Is the trend up, down, or sideways kind of at this point on the right side of this chart? Well, if you look at the yellow lines, you can see I drew a little bit of a symmetrical triangle is the name of that price pattern. I drew some horizontal resistance at this short-term high at 27. I drew some horizontal resistance about 27.67, and then I drew some resistance up there about 27.94. Now, which one of those areas is the right resistance? Well, the answer is all of them. They're all valid resistance points. And a resistance is just a price at which the stock's gone up to and fallen away from. Now, those probably are not very strong levels of resistance. This diagonal line where we have multiple touch points is probably a stronger resistance area than these individual lines. But one of the things I think is important is remember that these lines are levels of resistance. So, sellers may come in at those levels, and I think it's just something to watch for. But the stock is trading sideways. And so let me give you another little nuance, maybe for Hugh, and I forget who asked a question about the rules. But one of the nuances associated with this rule set is when the stock is trading kind of sideways, you'll see the indicators go green, but the stock really is still in that sideways trend. So what we generally would wait for, in addition to the 2 green arrows, is a close above that resistance area. So like if I move the chart forward here, we have a green arrow on the MACD, the stock's above the moving average. Sorry, I coughed. I didn't want to cough in everybody's ear. Here on the, we have our 2 green arrows, but some traders might just say, you know what, that horizontal resistance at 27.41, we closed a little bit above that, not a valid buy signal for me. Some people might look at that and say, well, the diagonal line was broken, I'm going to go ahead and buy that. And some people might say, well, I'm going to wait for it to close above 27.94. Okay, but I just want you to decide where that is for you. Okay, is that where you can go? What's going to cause you to take action? That's the question. And here's how I like to phrase that. If I go over here, okay, let's go back a day, right? What would have to happen tomorrow for me to buy this stock? Well, the MACD would have to turn green. And I think, oh, the sideways trend, I'm going to look for a close above, let's split the difference. I'm going to look for a close above 27.67 kind of end of the day. So next day, we trade above 27.67, but we closed at 27.45. So not a buy signal yet. Now the next day, if it closes above 27.67, I'll buy it. Next day, no, not quite. Next day, not quite, not quite. Oh, now I got red arrows again. So again, now I'm asking myself, okay, well, it looks like that 27.41 is becoming a little bit stronger resistance area. Now, if I ask the same question, what would have to happen tomorrow for me to buy this stock? In my paper money example, not a recommendation. Then again, the answer might be, well, if it closes above 27.41 this time, I'll go ahead and get in there. I recognize that, yeah, 27.67 and 27.94 are going to be little choke points, parts where maybe people will sell a little bit or there might be some resistance there. But I could say to myself, if that thing closes above 27.41, I'm going to buy it. Okay. Next day, red arrow still. Okay, we got a green arrow again, but no close above 27.41. That's actually the 25th. Then the next day, right there, someone said, hey, big old gap up again today with a big move. And so the question then is as well, what can we do here? Did I lose sound, everybody? Looks like I lost my picture. All right, we'll come back. So this is a valid buy signal based on our rules. And so I wanted to place this trade as we kind of wrap up our session today. Is we have our 2 green arrows. We've closed above this resistance. The purple line on the chart is 1% below the moving average, which is where we set our initial stop order. And that's at 26.68. And so I'm going to right click right up here near the close. I'm going to do a buy custom with OCO or stop because we don't have a target per se here. And let me shrink down the left side so we just have some more space. So we're going to put a limit order at the close. So we've got that 28.55. And we're going to unlink that just because if something changes, I just want my stop to be set manually. And we said 26.68. If I put my cursor up there, you can see 26.68 pops up in purple. So 26.68 is our stop. Now, there's a couple ways we can do this. In our 2 green arrow plan, in the original plan, we were investing up to $500 in the position. In that AI section we did last week, we were investing $1,000. But we're going to go back to that $500 investment here. And so we could take our calculator and we could say, well, $500 divide by 28.55, I can go in with 17 shares. And so that's what we'll do here. We'll place an order to get 17 shares. We'll lock that link up, and so it'll say 17 on the buy and 17 on the sell. What do we need to do over here? Now, this TIF means time in force, and the market's closed. So basically a day order placed right now would be good through the next trading day. I still like to make this good till canceled, and then I'll want my stop order to be good till canceled there. All right, so hit confirm and send, and we just review the order. Buy 17 shares at 28.55. We kind of check the close price, which is right up there. Looks good. Sell 26.68. We can see that the moving average value is right there at 26.68 for today. And so then we check our buying power. Just this is how much money is invested in that position. We want it to be around 500, and it's there. Now the stop order, of course, not guaranteed to get filled at 26.68. That's going to trigger a market order. Could be filled significantly lower than that. And then if we have a 2 green arrow group like we do, I'm going to put that order in that group, and we send that order off, and that's become a working order for tomorrow. If the stock gaps up, it'll have to come down a little bit to satisfy that limit order, and that may not happen. So usually when you're looking at an order, that you're placing the next day sometime, if you can go in and check to see if that order is filled, that's usually not a bad idea. All right. So hopefully that's helpful for you here. On Pfizer, what did we do today? Well, we placed an order to get in on Pfizer. We reviewed our open positions. We took a look at that AI strategy, where we scaled in. We put an order to buy half at one point. ARM, Marvell, and that Knightscope, all orders filled. Knightscope continued to tank on the 30th, and we got stopped out that day. But the other ones are working pretty well. And so hopefully that's helpful for you. If you haven't had a chance to go through, our lessons, go back and review those. If you've gone through those and want to just catch our next opportunities, go to the playlist page, hit our Stock Investing for Beginners playlist. And, today's episode is actually episode 40, but you can go back and see what topics may be of interest to you and go watch those videos. Big shout out to Barb and everybody. Thanks for helping out there in the chat, and thanks for being here. Have a great day, everybody.